We are back in the call. You may please go ahead. Thank you.
Good morning, good afternoon, and good evening to all of you as per the time zone from which you have logged in. And welcome to the conference call of Q4FY2020 and Q1FY2021 results and business update. Thank you for taking time out and attending this call. I hope your family and you are doing well and keeping yourself safe. Before I begin, I would like to share a quick update. Most of you would have read in the paper that we have just concluded our deal with Morgan Stanley to lease 1.1 million square feet of office space. This is at our upcoming project, Commerce 3. This is the third commercial building in Goregaon. This is also one of India's largest office space transaction, and it's a meaningful step towards our annuity asset build-up. With this, we also want to let the world know that we want to be a serious office development player, and we will now be seriously looking at land and building such projects. With this, I will now hand over the call to Mr. Somil Daru, our Group CFO. He will take you through the numbers. Post that, both Somil and I will answer your questions when the Q&A begins. Thank you. Over to you, Somil.
Thank you, Mr. Oberoi. I guess most of you must have seen the presentation on the website, right? And this is we have also filed our results with the exchanges after the meeting. In terms of consolidated financials, we achieved consolidated revenue of rupees 625 crores for the last quarter, as against 536 crores for Q3 FY20 and 597 crores for Q4 FY19. The consolidated PBT stood at 350 crores for Q4 FY20 as against 209 crores for Q3 FY20 and 220 crores for Q4 FY19. The consolidated PAT for the same for the last quarter was 250 crores as against 148 crores for Q3 FY20 and 155 crores for Q4 FY19. The consolidated revenue for FY20 stood at 2285 crores as against 2661 crores for FY19. The PBT for FY20 was 968 crores as against 1177 crores for FY19. And the PAT numbers were 689 crores for FY20 as against 816 crores for FY19. For Q1 FY21, the consolidated revenue was at 126 crores with PBT at 39 crores and PAT at 28 crores. Oberoi Mall, which is the retail asset, contributed about 39 crores to the operating revenue for Q4 FY20 as against 40 crores for Q3 FY20 and 38 crores for Q4 FY19. The operating revenue for the full year FY20 was 160 crores as against 150 crores for FY19. The EBITDA margins in this vertical stand at about 95%. Commerce, which is the office space asset, contributed about 4 crores to the operating revenue for Q4 FY20 as against 6 crores for Q3 FY20 and 10 crores for Q4 FY19. The operating revenue for the full year was rupees 31 crores as against 41 crores in FY19, and the EBITDA margin in this asset is in excess of 85%. For Commerce 2, which contributed rupees 32 crores for Q4 FY20 as against 31 crores for Q3 FY20 and 25 crores for Q4 FY19. The operating revenue for the full year was 123 crores as against 83 crores for FY19. And the EBITDA margins in this vertical is in excess of 90%. The Western Mumbai Garden City contributed 29 crores to the operating revenue for Q4 FY20 as against 38 crores for Q3 FY20 and 37 crores for Q4 FY19. The operating revenue for FY20 full year was 131 crores as against 137 crores in FY19. The EBITDA margins for this asset continue to be in excess of 30%. In view of the lockdown enforced during the quarter ended June 30, due to the ongoing COVID-19 pandemic, the operations of Oberoi Mall and the Western Garden City were severely impacted, and however, the commercial leasing operations continued as usual. Moving on to the residential projects for Esquire, of the total project size of 21.22 lakh square feet, we booked a little over 20,000 square feet in this quarter, or rather Q4 FY20, Till date, we have booked about 17.21 lakh square feet, which is about 81% of the total available inventory. The total booking value for Q4FY20 was 41 crores as against 59 crores in Q3FY20 and 97 crores in Q4FY19. The total revenue recognized for the project in Q4FY20 is rupees 26 crores on account of 100% project completion. Similar numbers for exquisite. We booked about close to 6,000 square feet in Q4FY20. Till date, we have booked about 14.49 lakh square feet. The total booking value for Q4FY20 was 13 crores and the total revenue recognized was the same as 13 crores on account of 100% project completion. For Prisma, again, we have booked a little over 7,800 square feet in Q4FY20. Till date, we have booked about 2.59 lakh square feet. The total booking value for Q4FY20 is 15 crores. The total revenue recognized for this project in Q4FY20 is again 15 crores on account of 100% project completion. For Maxima, of the total project of 4.1 lakh square feet, we have booked a little over 9,000 square feet in Q4FY20. Till date, we have booked a little over 22,000 square feet and the total booking value stands at 14 crores for Q4FY20. Cumulative booking value till date is 36 crores. For Mulund, totally we booked about close to 36,000 square feet in Q4FY20 between Attorney and Enigma. And till date, we have booked about 11.32 lakh square feet. The total booking value is 51 crores in Q4FY20 and the cumulative booking value in Mulund till date stands at 1,653 crores. For Sky City, we booked close to 46,500 square feet in Q4FY20. Till date, we have booked about 18.8 lakh square feet. The total booking value for Q4FY20 was 74 crores as against 100 crores for Q3FY20 and 83 crores for Q4FY19. And till date, the gross booking value is 2,995 crores. The total revenue recognized for this project in Q4FY20 was 145 crores and cumulative revenue recognition till date is 2,036 crores. For 360 West in Oasis, the cumulative booking value till date stands at about 2,474 crores. Again, due to the COVID pandemic, the operational activities for June 30 were impacted, and accordingly, I'm not getting into individual asset-wise breakup of the booking. The total area booked in Q1FY21 was about 12,300 square feet with booking value of 24 crores, and the total revenue recognition in this quarter stood at 57 crores. Coming back to some key financial parameters, our adjusted EBITDA margins for Q4FY20 was 62% and the PAT margins were at 40% for Q4FY20. The EBITDA margins in the mall and commerce businesses are much higher than average. Excluding them, the margins for our pure residential business is 59% for Q4FY20. For Q1FY21, our adjusted EBITDA stood at 52%. PAT margins were 22% for the Q1FY21. And the EBITDA margins in this quarter, Q1FY21 for the residential business stands at 31%. With this, we would like to hand the floor back to the question and answer session. Happy to take response. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1. We have a first question from the line of Kunal Lakhan from CLSA. Please go ahead.
Hi, good evening. So just quickly on the fundraising plan, you've taken the enabling resolution like you do every year, but you also mentioned in your opening comment that you are seriously looking at acquiring land. If you can give us some color on what kind of opportunities are you seeing in the market, and how do you plan to capitalize on it, and what kind of capital outlay are you looking at, especially on the land front? Hello?
Yeah, Sonal, I think we Saumil.
No, I can hear you. Sorry, Saumil, I can take that. So, yes, this is an enabling resolution, and we continue to look at opportunities. In fact, given COVID, they'll come fast and thick, and we are evaluating. I think it's going to be long, until this flow continues and so on. So we are going to wait and watch and see where it really eventually settles, and only then we will venture into taking more, land parcels or things like that.
Just to follow up on that, are we still looking at opportunities in and around Mumbai, or we still have those plans of venturing out of Mumbai?
No, so we are looking at land across Mumbai and outside. In the external, we have very few geographies. We would like to look at NCR and probably Bangalore, but major focus will be on Mumbai and NCR.
Sure. My second question is on the news article which was there last week on the sale of 2 units in 360 West. Just if you can confirm on that, and additionally, if you can give us some color on how the interest has been, especially post easing of the lockdown, not just 360 West, but even other projects.
So, the visits to site have been very encouraging. I must say that I did not expect people to be coming out and visiting, sites and visiting our experience center. But I was very pleasantly surprised. In Mulund alone, probably we would have done more than 200 visits since it opened. We have done some 40 visits in Worli, and another 200 probably in Borivali. So the numbers are staggering. People really have come out and looked at it. Of course, there have been articles, misleading articles. I would say that real estate prices will drop by 20% and this, that, and the other, which obviously is working on the mind of people. And some of them want to wait and watch. Very few have really gone ahead and concluded it. But to answer your question, the response has been amazing. We have to yet see conversions, but they have come out, and it's been a pleasant surprise.
And on your comment on the news article last week on those 2 apartments getting sold in 360 West.
So yeah. I mean, like I said, that 360 West is very well received. Obviously the document is registered, and the newspaper article is a simple reproduction of what they see in the registrar's office. And there is a constant demand and constant sale happening in Worli. We're very happy. We would love for it to increase in terms of pace. But it's got a very good clientele. It's got a very good subsection of society in that building.
Sure, that's helpful. And lastly, on our Thane project, just considering the oversupply situation there and the prices, having already weakened in the last 6 months, how are we looking at that project in terms of positioning our product and pricing as well? And if you can even give us some indication on the launch timeline for the project.
So, firstly, let me answer that I don't see there being a scenario where there will be oversupply. And that takes me back to my earlier comment that I made, that misleading articles would say 20% drop in prices. If you see most of the developers, their balance sheet are stretched at current prices. I don't know where will they get this 20% discount from and give it to the buyer. That is point one. For that, input cost has to come down. And I mean, government is not really doing anything to bring that input cost down. We are almost paying 35% of our revenue goes to the government in the form of premiums and so many other heads. And we as an industry have made a representation to the government that, this is too much and you should really look at it. Otherwise, most people in the industry are dying. So having said that, if let's say that part is true, and if you feel that, not many developers will survive this pandemic, then there is no question of supply or additional supply coming in play. So I feel we are very comfortably positioned. When we launch Thana, we will not really have major competition, and I'm not saying that, but major competition will literally get, decimated or wiped out because of the pandemic. Our land purchase has been very prudent, and we will come up with very attractive pricing and very attractive deals. And I think for us, it will not be an issue at all. In fact, for a few of us, the market share is actually going to increase irrespective of the actual market also reducing. And, and I see this happen.
So, and the launch timeline?
So we continue to build our show apartment. We continue to build our experience center. And I think we should be ready around Diwali. We are looking at, this entire thing, how it's playing out literally by the month. And we'll just see how this plays out. And this is that we will probably take a call. We still haven't given hopes of a Diwali launch or maybe, later this year kind of launch for Thane. And we feel that, we have to do many new things. We will probably use a lot of technology and reach out to people in a very different way and market the entire thing in a very, very different way. We were the first ones to pioneer something like on a ready possession. We gave a subvention scheme where people could pay only 25% and move into the actual apartment. So, going forward, we have many such ideas. We as a company now have really focused that we are going to solve the customer's problem. Whatever be the customer's problem, we at ORL should be able to solve that problem and make sure that we help him buy that house. And that in turn, of course, gives us business. So that's like really the mindset that we are coming up with. And we will come up with many different schemes. It could be financial, it could be structural, many such things which will probably propel us to. And these 3 months have really got us to think on those lines.
Thanks, Vikas, so much. Good luck.
Thank you, Graham.
Thank you, sir. In the interest of time and fairness to all participants, kindly restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, good evening and thank you so much for the opportunity. Hope you guys are well. If you don't mind,
good evening.
Yeah. So if you don't mind me asking, I thought you're probably the best managed companies. Why is it that you're reporting Q4 only now? If you can give some color there.
Firstly, there was no, but then, on the other hand, we are the first ones to even give you Q1 2021. So I think we deserve a pat there as well. No, having said that, actually, look at the lockdown, look at the kind of time, we had to take to do these. And we actually thought that we will give both these results together. We were ready with the Q4 probably 2 weeks earlier, but then we thought that we can bundle it together and finish it off. We have no, shame in saying that Q1 has been a washout, literally. So we just clubbed it together and put it through.
Okay. Secondly, can you give some color on what the rentals on the Morgan Stanley deal is? What kind of without periods are you guaranteeing them? And what is the tenure of it?
We are under some sort of confidentiality with them.
Okay.
It's a great deal. It's a win-win for both parties. We are able to provide them with the world-class campus. So, and they are able to consolidate all their operations throughout Mumbai and put it under one roof, and ability to provide even better facilities and amenities to the people who are working with them. And for us, we get such a marquee anchor tenant, which will propel the rest of their development. It's like really a win-win. It's pretty much in line with what we have done Commerce 2 at. So they're not very different from that number.
And when does it start flowing into revenue?
So we have to finish the project. We have to deliver it to them in 2022. They start their fit out. 23 they should be in, and our rental will start from them.
Okay.
March of 2023.
Okay.
So really, this is like the biggest silver line in this quarter.
Undoubtedly, especially in the sentiment where everybody's talking about work from home, it's a interesting development.
Correct.
My last is on the slightly technical thing. You in your Q4 you recorded area booked for 360 West, but there are no units booked. How is that flowing in?
So maybe you can take over.
Yeah, Puneet. Just some upgrade by some person. That's it.
Okay. Great. That's all from my side. Thank you so much.
Thank you, sir.
Thank you.
We have next question from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you and good evening, everyone. So, Vikas, first question is on demand side. How do you see the recovery playing out? I know you talked about good footfalls, but just to get back to 200 to 300 crores sort of quarterly, pre-sales rate excluding 360 West. Over what time period do you think business can normalize there?
Hi, good evening, Sameer. Great question. We have been thinking, how do we really do that? Firstly, real estate is a big ticket, purchase. And given what has happened to the world and people in their lives, so many people losing their jobs, there being uncertainty around, their businesses. Obviously, people are a little worried about, writing such a big check. Having said that, the only positive is that in the lockdown, people have realized the value of a good house. So that has got people really going out and looking for it. And they are serious about shopping. So when that happens, obviously, there is hope. We don't have a structured timeline, but we also thought that there are two things that are going to happen. One, we will see thinning down of the offerings which people will have or what they will also want to go to. There will be clear set of developers who will not last this pandemic, and there will be this set of developers who will probably come out stronger. People will want to go with people who are strong because this is the biggest check of their life that they write. So they want to be very sure about who they are dealing with. So at one end, we feel that the market will thin down. They have already. There will be consolidation, and basis that we will probably be able to increase our market share. So because that is our first thing. Second, we have also, already hired experts to look at how do we reach out to our customer. How do we make an Uber or Amazon out of our product? How do we reach out to the customer? Today, we also feel that earlier, when you wanted to buy a house, you would go and see 10 projects. Today, you're going to only see 3. You will decide basis the material that is given to you, probably, through VR or through some walkthroughs and stuff like that. So we are hugely investing and upgrading on how you will visualize our project. Our first aim is to become, one of the 3. Once you put your foot in our project, then the project will speak for itself. And our conversions, once people come in, is like really high. So we hope that we'll be able to capture the market. Multiple things, like I said. We'll use technology. Market will support itself. There will be some elimination of developers. There will be concentration of these customers. I feel these are the positives. We have to keep focusing on them and keep working on them. I wish I could give you a timeline, but, I always tell people when I always want people to stay positive. I always tell them that we are just a vaccine away. Once that happens, we are all back to normal. There will be pent-up demand. All of us want to go back to the restaurants. All of us want to travel. Trust me, once that is found, you will not get a single room to holiday. You will not get a table to sit in a restaurant because we all are so frustrated. So that's going to really burst out. And then again, I jog my memory to 2009 when the Lehman crisis happened. People thought the world has ended. In the whole year, we were able to sell hardly 18, 20 apartments. And then the subsequent year, it just bounced back. Luckily, our product doesn't have a shelf life. It doesn't deteriorate as such. There is a carrying cost, but that's about it. So I just feel that this is a time one needs to sit, focus, and build. And once you can build that, the demand will always come back, and we'll be able to ride this through. In fact, I just want to add one thing, though it's not a part of your question, but kind of relates to that. What we have done is we've actually gone into individual projects and its numbers. Someone just told you that we are close to 3,000 crores of sales in Borivali with 3 towers. We have collected a little over 2,100 plus crores. We have to spend anywhere between 600-700 crores, and we have to collect almost 900 crores. Even if I don't do a single apartment sale, I can finish Borivali absolutely and deliver it with some monies in my bank. The same thing goes for Mulund. We are pretty much even Steven on how much I need to spend and how much I need to collect. Worli is fully ready. So Worli is only going to give us cash. In fact, let's say we have another 200-250 crores to go in spending, and we have to collect over 500 crores. So there is a surplus there also. So if you see all this, we have been able to secure our projects. For us, safety first and then growth. And we are clearly focusing on that. And that is not only our DNA, but it's also our strategy. Because going forward, people are going to really test you on these and then decide whether should I be booking with this developer or not. And, so we are 37 years old as a company, and we've never defaulted or delayed a possession. And we want to keep that track record going. We are ahead of schedule for all these projects as far as RERA date go. So, that's really our strategy. And I think we need to do our job well. The markets will do its job and probably, reward us for what we do.
Thanks for Vikas. Very helpful. My second question is, what's the supply side situation, which is on the ground picture on the site as far as man and material movement is concerned?
So, we are very pleased to see that labor is coming back. What we all don't realize or did not realize then was that these people need jobs. They of course need the life and safety first. So they went back to the villages thinking that, this COVID is, a rich man's disease. It comes from somewhere abroad, and we will get this thing in our villages. Everything is safe. Of course it was, because it had not reached the villages. They went to the villages. Probably some of them carried it. The villagers got it, and now they realize that the infrastructure in the city is far better than what is there in the villages. That's one. Plus, they need jobs. They are all coming back. Our staff strength, as in the labor strength, had come down to 25. It's gone back to 60. It was at 40, then went to 25. Now it's gone back to 60. We're at 60% capacity. And contractors have also become smarter. Earlier we had more people than what we required. Now they are able to streamline things better, make it a little more efficient. So I feel the fat is going from all the verticals of business, whether it's production, whether it's management or anywhere. I feel that this will be back and we'll not have a problem with labor. Material, of course, is very easily available. There is, in fact, a problem of plenty. Again, because very few developers are are buying material or paying for it. So elevator companies, steel, cement, it's like really and very easily available. There's really no issue on that.
Okay, great. Thanks. I have a few more. I'll get back in the queue. Thank you.
Thank you. Thank you, Samir.
Thank you, sir. We have next question from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for taking my question. My first question, Vikas, is since you spoke about, this Morgan Stanley deal makes you quite positive about the commercial aspects. But if we just look at the retail part of the portfolio, and clearly there are two malls that are part of our future plans, Borivali and Worli. Is there a change of thought on how we look at those assets now, post-COVID, given the situation of malls, multiplexes, etc., or we are going to go ahead with what was originally planned on those two assets?
So, firstly, we have pushed the dates for our Worli commercial building. We pushed our dates for that. Borivali, we continue to go ahead as planned. In fact, we have a very large anchor tenant. Literally 10% of my mall is taken by Inox. I had a call with Siddharth, and I asked him, I said, Siddharth, you have three options. One is you can cancel. Second is you can, downsize. And the third is you can actually, go ahead with what you planned. He says, I'm very bullish. And again, even he believes that we are just a vaccine away. Once this happens, people are going to come out and this is the time to build. And, you get reminded of what people did in '09. A lot of people who were building commercial because of cash flows moved into resi. And so there was a huge shortage of office supply in 2015. I clearly see that that's what's going to happen even in malls. We yet don't have, literally 10-20% of the retail in the world, and we don't have enough space in good malls. So this is where we are. Again, we believe in the business, and maybe we will have a few quarters that are bad, but overall going forward, I don't see the style or life of people changing. Once, like I said, that once you get the vaccine, you're a different human being altogether. So what you are thinking, what I'm thinking today is relevant only in the absence of the vaccine. And, the whole world can't go like this. And we are seeing now, we are keeping track of the medical, progress that the world is making. So you have to pivot your business decisions around all that. Already today, from a life-threatening, it's become, something which is manageable. And people are able to, not many people are dying. Statistics say that this is the least lethal of anything that we've seen in the world in terms of numbers and stuff like that. So I just feel that this fear has to play out. It will take its own time. The cure will come. It will take its own time. And we'll all get back to our regular life with a vengeance. And then these assets can't be built. So we are taking a very calculated risk. My mall at Borivali will literally get built out of the cash flows of my Sky City project. The one that we talked about is already fully paid for and done with. Same nervousness is there with retailers also. They don't know how things will pan out. But I think, you have to be brave and cautious both. So either or cannot do if you are in business. So I think, as far as those are concerned, we are on the right trajectory.
Fair point. My second question would be, is there any of our projects where we are looking at making some changes in the product offering just so as to, make it more today market friendly, say in case of Mulund, since we've spoken in the past that that's not a market where cash involvement typically tends to be higher. So post-COVID, any structural changes or any market positioning changes so that we are able to see faster sales, or things go as is right now, and when we launch Thane is when we rethink about how we need to position that post-COVID?
No, not really. Again, so I told you we are going to come up with different products. They will be financial products. They will be, we will approach it very differently. We'll understand people's problem and we will build a deal solution around it. And we will work this through. So we are very confident. Multiple things will happen. One, our building will be ready. It's going to be the best building in the eastern suburbs. Then we will bring a financial product such that will motivate people to buy. And like I said, that we will increase our reach, we use technology, and we look at things differently. We continuously try things and make it happen. So it's not like we want to sit on how we did it, what we want to continue with. If something is not working, we want to rework it and represent it. We did that, like I said, last year with Esquire. We changed the product. We gave subvention post-possession, and that really did very, very well. And, where our run rate was 40 apartments a year, it shot up to 90 and 100. And we were able to do almost $100 million plus sales in that year for that product. So if we are able to create something like that, we'll be able to attract a lot of traction.
Sure. I have more questions, but I'll come back in queue. Thank you.
Thanks.
Thank you, sir. We have next question from the line of Saurav Kumar from JP Morgan. Please go ahead.
Sir, I have two questions, both on Worli. So first is, Saumil, after the 2 apartment sales, should Worli now come into revenue recognition next quarter? So that's first. And secondly, effectively, if I look at the company, right, so between your Goregaon and Worli developments, you have almost 3,000 crores of completed inventory. I mean, that seems to be your share. I mean, what are your thoughts on liquidating or, just accelerating the sales because this is completed, at some prices to sell? So I just want to get your thoughts on how you are thinking about these 2 specific projects. Thank you.
So I'll answer your second question first, then Saumil can take the first one. I already told you that we are going to look at multiple ways of, approaching the customer, selling, and we'll do both very aggressively, and we feel that we will be in a position to do that. In fact, let me tell you that the fact that we have ready assets, unlevered literally, is a huge asset for our company. This is like clear, visible cash, and one can take that and literally, and again, you should add, by next year we'll have Borivali and Mulund. So if you put all this together, the number will probably cross 10,000 crores of ready assets with us. Of course, we'll be selling them, but we'll be one of the few companies who have so much inventory which is ready, and whereas others would be struggling to either complete their project and all that. I think this will give us a much bigger, bite into the customers. And that's what I feel will be actually our winning streak. Saumil, over to you.
So Saurabh, hi. As far as Worli is concerned, we are also pretty close to getting the occupation certificate over there. So once we get the occupation certificate, it genuinely doesn't matter because any which way we will have to do the revenue recognition for everything. So, irrespective, I think we would want to look at recognizing revenues now more in Worli on the basis of the occupation certificate rather than the percentage part,
And when is that OC coming from?
We expect it shortly.
In literally a matter of 2 or 3 months, yeah.
Okay. All right, sir. Thank you. Good luck.
Thank you.
Thank you, sir. We have a next question from the line of Murtuza Arsiwala from Kotak Securities. Please go ahead.
Yeah. Hi, sir. On the commercial office in the mall space, can you just give us a sense on how much is the capex spent so far and what is the balance capex? And timelines, is there any shift in timelines for completion based on, the month's loss, number one? Also, if you could give us some color on Oberoi Mall, I believe the revenue recognition is not being there during the quarter, and where do things stand on that front?
Okay. So as far as the office and the mall go, we have started work at 2 ends. One is the Commerce 3, and the other one is our mall in Borivali. Commerce 3 is going to be almost 2.1 million square feet of carpet. So the leasable area will go to almost 2.8 million odd square feet. There's an increase there. Borivali Mall continues to be as designed, and I'll let Saumil give you the expenditure bit. Delivery of Commerce 3 will be, as I said, that we have to deliver in 2023, operational, 2022 for fit out. So that is cast in stone. As far as Borivali is concerned, obviously, we were not able to work for the last 3 months, and so there will be a delay basis that. And also maybe, like going forward, like I said, that today we are at 60% capacity, so we're able to do about 60% of the work, or maybe 75% of the work. So there probably could be addition of a few more months. We are working a way to mitigate that. That, if let's say your question is that probably might get pushed by 6 months also today. And what was your other question? I'm sorry, I missed that.
So on the Oberoi Mall, the operational
on the Oberoi Mall, obviously, retailers haven't paid. They haven't paid anybody. Some people have come up with a formula where they are doing part rental, part revenue share. Some people have come up with waivers. So we are also waiting and watching. For us also, relationships are important. We want to make sure that we retain our relationship.
Yep. So would that mean that we've not recognized any revenue, but that doesn't mean that it's a no revenue quarter, and maybe you recognize subsequently, or how do we think of it?
Yeah, Murtuza, hi. Saumil here. I think we have lost Mr. Oberoi on time. So answer your question on it's only a deferral of revenue in all fairness. So we are basically moment there is certainty around this, so that's when you will actually see things coming back.
Okay, so probably in a subsequent quarter, once you've got clarity, you will recognize this quarter also, whatever the number is.
Yeah, exactly. So we are only, so to say, suspended the revenue recognition. We are not saying, this is revenue which is never going to come.
Okay, fair enough. And
as far as the spends are concerned, I can at least tell you what the spends are on Com 3 so far. It has been close to about 300 crores, and on the Borivali Mall, it has been close to about 150 crores. As far as the construction costs are concerned, this will all range in the region of about 4,000 to 5,000 rupees a square feet. And once we have a little more idea about where things are going, I think we will come back to you with the more formal numbers around all of this. There will also be certain FSI costs which will be incurred in addition to that. So I think those, there I'll need to get into a little more of, I'll need a little more color myself. So maybe if we can answer that to you separately once, offline, maybe Mayank and I can connect with you and we can have that discussion.
Sure.
Thank you.
Thank you. Yeah, thank you.
Thank you.
Thank you, sir. We have next question from the line of Swagata Ghosh from Franklin Templeton. Please go ahead.
Yeah, thanks for taking my question. So I want to understand how much of our customers are NRIs generally in a normal quarter, and we have heard from other developers that in the June quarter, the demand, whatever little has been there, has been mostly from NRI customers because of the rupee depreciation. So I want to get your comment on what you are seeing in terms of demand in that segment. And if there is any way we can also maybe incentivize our demand to those customers, NRI customers.
So hi Swagata. I'll be very precise because we did this analysis and because we were seeing where our customers come from, what should we do to attract them and all that. So we have exact number. We have 7% of our buyers are non-resident Indians, and most of them lease their apartments. And so this is where they are. We also have had an increase in inquiries in the early part of this quarter. And again, I must say that there has been no conversion. There has only been inquiries, and we have, answered their queries, but waiting and watching as to what they will eventually do.
Okay, fair. And second question I have is for the June quarter, we have some reported numbers for the sector overall for the MMR market. And also we have heard news that developers are offering some discounts. So I just want to understand, have we actually underperformed the market because we have not offered any discounts whereas others have? And if that's the case, will that continue for some time?
I strongly believe that discounts don't seem to work. I mean, it's never worked. The discounted price becomes the new price. It's not like, and then they will want a discount on that price. I strongly feel that they don't work. We need to work around the needs and issues of the customer. And like I said, that we are coming up with overhauling the entire marketing strategy of the company. And then we brought in some real experts which have not worked in the real estate sector as deeply as they are working with us now. So basis that we'll come up with a marketing strategy and address it. We don't want to do, this is a major reaction of anybody to kind of, circumvent lack of sale. It's just to kind of come in and discount the product. But I genuinely feel that it doesn't work. It creates more confusion in the minds of the customer.
Yeah, no, I understand that that is your stated strategy. But if others are reacting that way, and if the crisis situation is prolonged, then how far can we actually maintain the strategy? That is what I want to understand.
So, let me tell you that others with full price also, if you look at their balance sheet, they are stressed. They are actually, literally, on their way out. So I genuinely don't know with a discounted price, how will they look really? And if they are discounting, it's like almost saying that you will get high interest rate, but you will never get your capital back. It's like that. You might get a cheap deal, but you'll never get the apartment. So, I mean, I feel that customers are very smart. They will read through that and they will not fall for anything like that. Anything that cannot be built at a price cannot be built at all. I don't think these developers will put money out of their pocket and build it. So I feel it's a trap, and I'm sure customers also get it. It's not easy unless it's a ready apartment and people are really ready to move in and all that. I don't see how these guys will be able to deliver.
Okay, got it. I'll come back in the queue for more questions. Thank you.
Thank you.
Thank you, sir. We have next question from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. Sir, what will be the current operational cash burn in the Westin Hotel and the Oberoi Mall, say on a monthly basis?
So I'll just tell you, we did this math also, and I called my GM and I told him that given the way things are, what do you see? Will we have to put in money or will you be able to manage by yourself? So he has promised. He says that I will not take a single rupee. Westin was always, a hotel that we built, and we were always worried that we'll probably have to put money to operate. But we've never had to. From day one, we've never put any money, and in fact, it goes through even today. You'll be surprised that Westin has been able to maintain almost 80% occupancy in the last month. Because we were able to sell rooms to essential services guys and were able to manage its operational costs. So very, very pleased with the way things are moving at Westin, And again, on the mall front, every cost is a pass-through. So we don't see that there will be any cash burn from the company. The least is, even if, let's say, things go into revenue and, there's a small portion of rent, it still is going to be cash flow positive for us. And there'll be no cash burn, absolutely no cash burn, the way these are structured. And both of them, they have no debt on them. So, there is no additional interest burden on these two projects. So they're clean.
Yeah. And sir, my second one is on the common one. In fourth quarter and first quarter, the occupancy seems to have dipped to like about 30% level from 77% in the second quarter of FY20. So can you give some color on what?
So we had a large anchor tenant move out because we could not give him space. Major part of that has been leased, and we had given like 6 months of it out. This question was asked the last quarter also. And coming quarters, you will see the rental again come back there, at least in case of these additional floors.
So after this, how much the occupancy will be? About 70% or?
We'll come back to our, in the original 70% number.
Okay. Thank you.
Thanks.
Thank you, sir. We have next question from the line of Manish Agarwal from JM Financial. Please go ahead.
Yeah, good evening. Thank you for the opportunity.
Hi, good evening.
I was just looking at the timeline for Worli Mall, Borivali Mall, and the Worli Hotel. Are there any delays?
So Borivali Mall, I told you we are probably looking at another 6 months delay. As far as Worli Mall is concerned, we haven't even started the mall. And as far as the Worli Hotel is concerned, we are trying to rejig the numbers. We might reduce the number of rooms in that hotel and probably, relook at that asset and get some better use of that asset. So that part is being considered, and that's why I don't want to venture into saying anything. But we are looking at reconfiguring a small component of the hotel there, and then we look at the asset, the Tower A of our 360 West.
Okay. And on the Borivali Mall, has there any talks been regarding leasing momentum? I understand that anchor tenant is large, which you communicated, but apart from that?
No. So, in the last 3 months, one could have not even gone anywhere. And obviously, retailers are struggling with existing stores that they have. So obviously, one cannot, expect them to come on the table and start negotiating with us. They are busy negotiating their existing leases, both with other mall owners and us. And we are mindful of that. Again, like I said, that this is not this is being built for the future, and we are quite confident that the market will come back once the vaccine is out, and we all will, I think, see better days.
Sure. Thanks a lot. That's all from my side.
Thank you.
Thank you, sir. We have next question from the line of Manish Gandhi, an investor. Please go ahead.
Yeah. Hi, Vikas. Hi, Saumil. I hope all are fine at your end. And congratulations on Morgan Stanley deal.
Hi, Manish. Thank you. We are all doing well. I hope your family and you are doing great.
Yeah. Thanks. So my first question is on our 2 upcoming malls and its design. So with fast changing world, even before COVID, so how different or flexible our design with respect to, say, retail versus entertainment, or say future of malls, like how Wanda has changed, transformed in last 5 years, or say Westfield's shopping destination of 2028. Anything I would love to have your thoughts on that.
So, again, we are absolutely spot on. In the last 3 months, we've looked at how we can, upgrade the mall and its experience. Today, of course, again, I'm saying that this will all be post-COVID. Today, malls are not merely spaces where people transact. It's an entertainment hub. And if you really look at Mumbai, where unfortunately we hardly have any public spaces where one can.
Hello. So please stay connected. We seem to have lost the line of the manager. Please stay connected.
So this is where we are, where we are trying to learn from the world. And in fact, the same architects who the Westfields of the world and Wanda have used are our architects for this mall. So we are very lucky. We are not only getting the best practice, we are also getting the next practice. What people are doing, these architects actually discuss with us and actually tell us how do we bring in and engage our people for longer. If he's coming to buy something, he'll probably get in and go out. But I want him to spend, 3, 4, 5 hours of his time there. So we are looking at multiple ways of engaging with him. Pre-COVID, it was even the WeWork kind of space that existed in malls, which actually got people to work there. But now, of course, things are dynamic and changing. So we are also, learning and building together, I would say. These are fantastic examples, great companies to learn from. Luckily, like I said, that we've already hired the same architects. So we're getting insights on how these companies are planning for the future, because these guys are doing more malls for them. So we are getting an insight, and we are very mindful. Very good question at your end. How to keep ourselves current. That's the whole thing. And that goes with everything, why only malls? How we approach our customer, how we treat our customer. We'll have to get current with everybody. And we'll have to, come up with ideas that will be more engaging for the customer, more innovative, more control in the hands of the customer. We are looking at, our new projects will literally have you design your own house, pick the color that you like, pick the tile that you like, and, maybe some internal layout changes, and so on and so forth. So literally like a bespoke home directly from the developer. So a lot of technology use will come in play and all that. So that's what we are doing now.
Yeah, good to hear that. So my second question is how you're thinking, say maybe not change, but saying one or two deals you were looking very closely. Say for example, a big redevelopment in a prime location. So how differently you think about those now?
Well, I'm open to everything. Businesses don't change. It's just the way you do your business will change. Like you said, the mall will always be there, but what kind of mall? And a building will always be there. What kind of building? A deal will always be there. What kind of deal are you really looking at? So these things one needs to address, because the basic premise of everything is going to remain the same. What Uber did, people still want to go from A to B. You still want a taxi, but how you approach it has changed. Am I solving the problem of a customer? That's my only question today in my head. And if I'm solving his problem, he's going to stick to me. And that's really, and everything around my customer. Yeah, so this is like a big drive in our company. We made that into our motto, that we're going to solve people's problems. And be it, ability to buy, or whatever that may be, we will make sure that we are solving problems.
Right. And just lastly, so what we have all learned in Mumbai, and a pain point for Mumbai is the slums. And I shared one article also with you. It's a very historical article about the Paris and Amsterdam, how the cities changed after pandemic in 17th century.
Correct.
So do you feel hopeful about in next 10 years it can radically change? It's a win-win for all, including Oberoi, because very few developers are capable of doing all those things, or is it too much to expect from the authorities?
No, you are absolutely spot on. The authorities are very serious, and they have taken this upon themselves that they will resolve this. I must tell you, in the last 3 months, things have gotten so easy. We made an application to MMRDA for connecting the metro rail metro station to our project, and we got an online approval. Never heard of, So it's beautiful, I would say. So the mindset of even the officers are changing. In municipal corporation, I have got an approval for one of my, additional CC for my Mulund project without going there, because we were in a lockdown. And in 1 week's time, the file moved through, literally one box to the other box electronically on the computer, and we got approval. So the department is very serious in doing this. There is a wake-up call. I hope that the seriousness and the momentum continues even after the problem is solved. We